Good Thursday afternoon to you. Welcome to the Jon Sanchez Show on News Talk 780 KOH. It's a pleasure to be with you and a pleasure to be with my co-host. Around the horn we shall travel. He is a busy man right now, folks, and boy, does he have some news to share with us today. Dwight Millard, Highlands Mortgage. How are you, my friend?
I'm doing fantastic. John, how are you today?
I'm great. Like you said, living the dream, brother. Living the dream.
Ready to move on.
That's right. That's right. Corey Edgeved Realty, always nice and calm, always laid back, not influenced by daily stuff like Dwight and I. Corey, did you even know there's a government shutdown? Because your industry doesn't even care about that right now.
I mean, I guess that's the whole point of the shutdown, right? Has anybody been affected? I mean, I'm sure there's a couple people, but is anybody really complaining other than if you live in New York, apparently?
Yeah, right.
Yep.
Yep. Imagine that mess over there. Yeah, $18 billion all of a sudden withheld from you and so on and so forth. But there's a lot of things impacted. I tell you what, the hardest problem that I'm having right now is not having any economic reports to talk about either on the show or in the morning with the stock updates, because let me tell you, you don't realize they like become a part of your life, right? And this morning I had them, all written down as I always do before I had my first update with Ross at 5:23, and then the news came out that they weren't going to be releasing anything, and it's like, okay, now what? Because you trade off of that data, right? And you don't have it, and you're like, okay, well, what are we going to trade off
Well,
of today?
and if I heard right, I thought they said the jobs report for tomorrow, which won't be announced, that the data's already compiled. Like there already is
Sure.
a
Oh yeah, it was
report.
compiled a week ago.
So,
Yeah.
Somebody has that information.
Absolutely. Yeah. And I guarantee it's in some hands that we probably don't even know whose hands it's in. These I won't even go down that path. You know where I'm going with it. But yeah, you're right, Corey. Yeah, because I remember when they fired the gal that was in charge of that, when Trump fired her, and she's like, look, I can't manipulate the data. That data is viewed by thousands of people up until the final week. And then it's like basically sealed at that point, right? The data's all done. And so, yeah, to your point, yeah, I'm sure that data was done probably last Friday, is the way I understand it. So, anyways, we will see. But yeah, it's very bizarre not to have any economic reports to, like I said, to trade off of, or as important to talk about. So,
Well, hey, listen, your market seems to be doing just fine without it.
it
So
really does.
maybe you're in better space.
Yeah, right. Well, as Jason and I shared on the show yesterday, because remember on Tuesday, the three of us, we talked about how the government shutdown is affecting or could affect the real estate market. Yesterday, we talked about how it affects the stock market in our personal lives. And, again, I'll bring out that stat that we shared both of those shows. And that is, the last government shutdown lasted 35 days. That was 22 trading days. And the S&P gained just a smidgen above 10%, averaged almost a 0.5% gain per day, almost a 0.5%, like 0.47%. And so, to your point, Corey, you're absolutely right. Yeah, market doesn't care about it. So until it does, right? Until it does.
Yes,
How about that?
exactly.
Yeah.
John, I had a meeting last night, but I'm sure you covered the horrific numbers of the job, at least what we got from ADP.
Yeah, on the ADP.
I mean, come on. I think if I remember right, John, you always say that a healthy economy is somewhere between 200 and 225,000 jobs per month created.
That was the old days, my friend. You're
okay,
right.
Okay, yeah.
Now economists are pretty happy with, say, 60 to 80,000 average, because now we get these massive revisions. Remember the 900,000 fewer jobs they told us about a couple of weeks ago, and so that's lowered all the expectations. Yeah, 60 to 80 is really on fire. 40,000, yeah, everybody's okay with it. But negative 32.
Negative, yeah.
But remember, that's the private sector. That's not the.
Well, the government's only gonna, if Trump has his way, that's just gonna add to it, right?
Even hurt that was gonna hurt the overall number. You're absolutely right. Yeah, there was no news on that. That's a very good point to bring up, Dwight. Remember, folks, President Trump announced yesterday. Couple little comments today, nothing really worthwhile talking about, that he's going to essentially use this government shutdown as the opportunity to permanently eliminate, I've seen projections as high as a couple 100,000 government jobs, Democrat jobs, as he calls them. And as Jason and I joked yesterday, it's like, how do you identify them as government jobs? I don't know, but I'm not going to get into that. But yeah, that could be interesting. So Carolyn Levitt, the press secretary today, said the news is imminent. That's what she said today. It's imminent as to what they're going to announce on that side.
I mean, he's the master of marketing, the Schumer shutdown. Yeah. Just tags everything, right? I mean, it's just quite amazing. But yeah, the latest I saw is that looks like there may be something coming around maybe middle of next week. They've just got to get 3 or 4 more Democrats in the Senate to.
As far as the vote.
Yeah.
to get it
Yeah,
passed.
they're thinking maybe
I think
middle
the
of
Dems are
next
gonna
week.
cave
I
on
mean,
it.
it gets
I
longer
do.
than that, John, then everybody's a bad guy.
Yeah. Yeah.
Everybody
Well,
becomes a
remember,
bad guy.
every day that this government is closed, it costs the economy 0.1% of GDP each and every week. Yeah. I said yesterday, in Corey, I want to thank you. You brought up that original idea when we were, kind of looking at some, unique circumstances to the government shutdown. Some other people came out yesterday to validate your point, Corey, that you said on Tuesday, and that is Trump should be in no hurry, right, to shut the government or to open the government back up because, again, it's more pressure on the Fed. Maybe not a 0.25% cut in October, maybe a 0.5%. So if these jobs numbers just tank when they finally do open and the economy slows, and get economists coming out and going, look, at the government was closed for whatever 2 weeks, 4 weeks, whatever it is, and we're revising our GDP figures and all this bottom line negative news. That's what he wants to pressure the Fed. Maybe, like I said, he's in absolutely no hurry to do it.
Well, and he's a stock market guy, right? So as long as this thing levitates
Yep.
to
Yeah,
him,
right.
he can do no wrong.
Right. That's exactly right. And I want to go back to the point I just made a second ago, and that is until it doesn't, right? This is typically what happens, if I remember correctly, that last one again, the late 2018, early 2019, you kind of get to a point where you go, okay, this isn't healthy, right? Where we can't see what's going on and all these people that are furloughed and so on and so forth. Because remember, another point on that, before I forget, these government workers, to my understanding, it takes them a month to get caught up on their pay. So yes, they're getting paid while they're furloughed, but it's going to take them a month to see that paycheck in their bank account.
Well, it'd be interesting, John, to see, delinquencies have just slowly creeped up in the mortgage and autos.
Yes.
So it'll be interesting if it goes a month or so.
Right.
What that's going to look like.
I was reading some just horrific statistics, Dwight. I thought about you yesterday when that government shutdown did last the 33 days. And people were, missing mortgage payments and so on and so forth. And, the credit bureaus don't care about that. They don't care whatsoever. Matter of fact, when I logged into my bank account today, there was a notice at the top that said, if you are a government employee affected by the shutdown, call us. So, you may start to see some of these lenders, Dwight and Corey, that are going to give a little bit of a grace period or something, which, hey, you know what? It's not the government workers' fault of what our politicians do. And like I said yesterday, well, these politicians are still collecting their paychecks though, even though, they're saying, we're going to donate it back. Yeah, we'll see. All right. Speaking of FICOs and debt and all that stuff, we're going to share with you here when we come back from the break, a really interesting story today that came out regarding Fair Isaac, which of course is the parent of FICO, produces the FICO score, trades under the symbol FICO. Stock shot up $271.97. That was a 17.98% gain, closing at $1,784.68 a share. So in Dwight's world, FICO, of course, is the big 10,000-pound gorilla, but they're changing the way FICO scores in Dwight's world are purchased and so on. So brokered, I guess, as we're learning. So it's going to be a really interesting story. You don't want to miss that. But in the meantime, let me tell you what we have lined up for you. Here we are sitting with mortgage rates crept back up after the Fed interest rate cut. Again, we'll see what the impact of the government shutdown and so on and so forth is on real estate as time goes on. But I get a lot of questions, guys, about, how do I create cash flow without physically being involved in the real estate? In other words, without being the landlord. Corey, I think it's really fascinating. This is what we're going to be talking about today. I mean, all of you know about rentals, all of you know about Airbnbs. But there are some very, very interesting ways that we can get cash flow without physically being the landlord. So what the guys have put together today is basically 7 fresh strategies. These are fresh. I don't think we've ever really covered these before. And it's going to be from crazy things. I don't mean that in a negative sense, but from leasing land, solar companies, cell towers. I mean, there's a lot of things that you can do. Again, still having the real estate ownership title, but without really being that landlord. So, guys, I'm really excited to go over this topic when we get to it here momentarily. But first, let's turn it over to Kristen Snow. She's in the Right Now Traffic Center. Hello, Kristen. Welcome back to the Jon Sanchez Show on News Talk 780 KOH with Corey Edge of Edge Realty, Dwight Millard of Highlands Mortgage. All right, record. Wait. Let me back up. It's been a while.
There you
Dwight,
go.
what kind of day was it today?
Another record-setting day.
There you go.
What do you mean it's been a while? It's been every single day.
I just haven't been on every day.
Yeah.
But today, Corey, it's the trifecta. It's all 3 major averages. See, I didn't get a chance to finish there. It was a trifecta record.
Gotcha.
There you go. And it doesn't take much, right? Like you said, we just keep setting records day after day. So here's how we finished up for the day. 79-point gain on the Dow to a close of 46,519. NASDAQ rose 89 points, 0.39%, closing at 22,844. And just a 4-point gain on the S&P 500, finished the day at 6,715. Pullback $1.31 on oil, 60.48 a barrel. Gold finally started to slip a little bit after, speaking of records, it just keeps setting, it seems like, day after day. Gave up $29.30, 3,868.50. And Mr. Millard, to the bond market. Bond market feels lost, Dwight. I mean,
yeah,
man, oh man,
we're all
today
lost,
for
John.
hours. It was like unchanged. It just doesn't. Again, these bond traders, they trade off of economic data when there's none.
Shoot, John is taking me back to the 80s, right? Where it's slow and, slow, it's just yawners, but the 30-year fix today, 6.36, which is just down 1 basis points. I mean, we're just right in that 6.3 range. Again, the 15-year 5.87, and then the government's 6.05, 6.07, right in that range. I don't know what's going to break this, other than I still think, John, and correct me if I'm wrong, I still think the market quasi has a October rate cut in the bank already.
Absolutely.
Yeah. So it might even have a December in there.
Two.
Yeah, it might even have the December in there. So
Yep. Absolutely.
Yeah.
So you need, to your point, what's going to break it? You need economic data, right? Good data, good impact on the rates, and vice versa. No, you're absolutely right.
I just don't know. And maybe I'm not explaining it right, but I don't know what it takes to get a bond trader back in the buying game. Why would you want to buy a bond, John? Why would you want to buy a bond? I mean, this sleepy little thing over here that just drudges along. That there's a shiny object.
Well, but that's the reason why. You just answered your own question, Dwight. That's the reason why. So I can get as of the close today, a 409 yield, 4.09% on the 10-year, right? So I go, okay, I want to give the government my money for 10 years. I'm going to collect 4%. We'll round it down each and every year. I don't have to worry about a doggone thing. I don't have to, now the worry, Dwight, is, of course, as we discussed many times on this show, stock market valuations. Can this AI momentum continue? There's some concerns about the accounting and all those things we talk about each and every day. So that's one reason. You go, okay, yeah, let's just say inflation's high 2s, so I'm netting a little over 1%. Well, if you've got a bunch of money, that 1% net yield, what we call risk free, where you net out the inflation rate, it's not bad. It's not great. It's not bad. But let me give you a reminder, my friend, and everybody else. There are institutions that have to buy the bonds, right? So let's use an example. If you're a pension plan, maybe an insurance company, anything that you have to have a portion of your money in bonds, they've got to buy it. They got to plug their nose no matter what it's doing. They got to buy it. So if I'm a big institution and my investment policy statement says I can only have a maximum of, say, 60% stock market exposure, what I got to do that 40%? I've got to buy bonds. Now, some plans will say in that investment policy statement, which is the guiding light, you can have a certain percentage in corporates and a certain percentage has to be in governments and different maturities. I mean, they can get very, very specific, but they will always someone always will have to be buying bonds. And, we always tend to forget that, right? Because to your exact point, you're 100% correct. If I'm a growth investor, why do I want to go into the bond market right now?
Do you think that if Trump gets his wish in terms of the feds next year, do you see any possibility they start buying mortgage-backed securities again?
Why would they?
Just drive rates down?
That's an emergency play, though.
Well, Operation Twister, Operation whatever.
Yeah. And if they cut rates and if the stock market and the economy continue to do well, there would be no incentive. To me, I look at it as I want to keep a little bit of a rainy day fund, meaning if things did get bad, then I could come in and start buying mortgage-backed securities and artificially drive mortgage rates down as they did in the past in the various economic cycles. Or do I want to keep that in my back pocket as, again, a kind of a rainy day type of strategy? I think I'd lean towards the latter.
But if you're going with that rationale, then it's going to be very hard for these rates to break inside of 6%, go into the 5s.
Yeah, no, I've said that.
And 5.5 almost looks like a distant hopeful.
I think you think you're lucky stars if you're at 5.5 or anything between 5.5 to 6, right? I think you're going to settle in probably in the low 6s by the end of this year. I doubt we were going to break 6%. I just don't see any catalyst at this point. There can always be a black swan event to do that, but you're absolutely right, Dwight. the way things are set up, the way all the systems are set up, and the way the economy is set up, and on and on and on, I just don't see anything that would drive us that low, right? Again, unless there is something that happens negatively in the economy. Let's go back to your original point. Let's say the jobs market just starts to tank. That could be one of those quote outlier black swan type of events, right? If we get when we finally get non-farm payroll numbers, let's say they go, oh my God, we lost 200,000 jobs. And then the next month, oh, we lost 150. Next month, we lost 300,000. That's going to get everybody's attention. Then you could start to see some emergency type of strategies from the Fed to do that. Because you would stop. I mean, obviously, we would see everything, not only the equity market, but the housing market, everything would start to go down. So now they go, okay, let's start buying the mortgage-backed securities, not letting them mature off the balance sheet to artificially stimulate.
So in 1 year, we started at 6.17 September of last year. We went almost all the way up to 8. We've come down. We're going to end a year later at 6.36. All that
Yep.
for a reduction of 15 basis points.
That's right. Exactly. Yeah, that's the point to it. All right. Great questions, my friend. Great questions. Now, I'm going to squeeze this in. We got a couple minutes before we got to go to break, but I'm going to squeeze this in, guys, because Dwight, this is right up your alley. And you deal with credit scores each and every day as a mortgage lender. So I think this is the easiest way. Instead of you paraphrasing, it's a relatively short story. It's from the Wall Street Journal. And then, Dwight, when we come back from the break, if you can kind of put it in English for people to understand how important this is. So I told you what Fair Isaac stock did again today. It was just a massive mover, up 18%. So here's what happened. Here's why the stock shot up. So according to the article, so Fair Isaac is upending the credit scoring industry by giving mortgage lenders, a company like Dwight, a way to get its credit scores without buying them from Experian, Equifax, or TransUnion. The changes among the biggest shakeup in the credit scoring system in decades, reflecting regulatory scrutiny in the second Trump administration. Okay, so he's behind this. Earlier this year, Dwight's favorite organization, the Federal Housing Finance Agency, FHFA, you hear him talk about it all the time, authorized lenders to use FICO rival Vantage Score, which was built by the 3 credit bureaus for government-backed mortgages, challenging FICO's monopoly over the $13 trillion mortgage market for the first time. Until now, the mortgage credit specialist known as, that's the term I was looking for, Dwight, tri-merge. You've used that term. So mortgage credit specialists known as tri-merge resellers had to purchase the FICO score through Experian, TransUnion, and Equifax to provide a lender with a combined score drawing from all 3. These resellers exist because federal guidelines require mortgage lenders to evaluate scores from each bureau, but lenders prefer to work with one single company. FICO sells algorithms that generate the 3-digit credit score based on data compiled by the credit bureaus and doesn't have access to the same type of customer data on its own. That means resellers will still have to pay bureaus for credit reports, even if they opt to buy the scores directly from FICO. FICO's new program streamlines the process by letting resellers buy scores straight from the company for $4.95, the same price it charges credit bureaus, and an additional $33 once the loan closes. Under the new program, both fees are charged for scores from each credit bureau. After the credit bureau markups, the average cost for resellers and other mortgage companies is about $10 a score. Dan Smith, president of the credit data industry that represents the 3 bureaus, said the direct license program amounts to, quote, another price increase by FICO. And Dwight shaking his head, yes. So I'll stop right there. Dwight, make sense of us. Take us behind the scenes with TriScore and so on and so forth. What really happens when you come in, you go, okay, we got to run your credit, how this program works, because your cost is even significantly more than this, right? You're, as a mortgage lender, you're having to pay much higher costs, et cetera. So I want to get your input on that. But first, let's turn it over to Jack Saban. He's got news, traffic, and weather. Hello, Jack. Welcome back to the Jon Sanchez Show on News Talk 780 KOH with Dwight Millard of Highlands Mortgage, Core Edge of Edge Realty. Once again, a record-setting trifecta day, with all 3 major averages closing in record territory. The Dow rose at 77, NASDAQ up 89, and the S&P higher by 4. All right, before we get to our real estate topic, how to create real estate cash flow without being a landlord, let's get Dwight's opinion on this big shakeup in the credit bureau reporting world. So put this in English, Dwight. What the heck happened today?
Well, so over the course of probably the last 4 or 5 years, John, I've noticed credit reporting fees from the companies that we use have gone up. I mean, John, they're well over $200 right now.
Gee,
and in the old days, they were $25, $30. Right. Remember that, Corey? They were, for 2 borrowers, it was $60. Now can be $300 plus. I think what happened, so Fair Isaac is the algorithm that each bureau uses to generate their scoring model. And the reason why you get different scores is because some will report an item and some don't. I mean, that's the way it goes.
Yep.
And so that's why we always choose the middle score of the lowest borrowers, what we run with.
And that's between TransUnion, Experian, and Equifax.
Equifax.
We're talking the three. Yeah. Okay.
And so you can go directly to them. And remember, we had Credit Karma on here about a few years ago. Remember? And remember they said that they're just a tool. And when you start throwing a risk factor in it and things like that, it starts to tighten down. Well, so I think what's happened now, because the lending industry has been complaining about the exorbitant fees, how do I pass on a $295 credit report fee? Right. So I think this is that effort to say, hey, we're done. You guys can come directly to us and we'll give you the scores. And that's why I think these credit bureau stocks went down.
Yeah.
I would hope that we all go to them. The integrity is the same. Right. I don't know why we would use a third party vendor to go get it and distribute it to us at a premium.
Yeah, you had TransUnion today down 10.05%, $8.27 loss, 9.5% loss on Equifax, down $21.49.
Yeah. I think
so. I wonder.
Go ahead, Corey.
Oh, no, I was just going to say, I wonder in the future, Dwight, if you go straight to them, you'll get one score per person, right? Like a score is a score.
Yeah. Well, you'll get all the three scores. You get the tri-merge that John's talking. We require a tri-merge. Matter of fact, John, if I only get 2 scores, there are certain loan programs that require me to go find that third score.
Well,
so
that's what I'm saying. FHFA requires the use of 3.
The 3 scores. Yeah. So it's not, and now, can you imagine in today's world, everybody has their scoring model locked down, right? Everybody's got it frozen. So we have to go back.
So what's it, bottom line, what's this going to mean for you and other?
I think savings directly to the consumer. I'm not going to have to charge you as much as I've been having to charge you over the past few years. I think absolutely.
Okay. Very good. All right. Yep. Things are always changing. That's for sure. Great. All right. Let's get to our topic, guys. How to create real estate cash flow without being a landlord. So the boys have put together, again, a really great list. And again, these are things that you may or may not have ever even thought about. But I really like this because, again, we're thinking outside the box, right? We don't want to be like everybody else. So when we talk about, we're going to call this our alternative real estate cash flow. Okay, so the boys put together 5 of these ideas. So let me start with the first one, Corey, and then let you explain this a little bit more. Billboards, cell towers, and EV chargers. How you can take a small slice of land, you can take a rooftop, and you can generate some very nice long-term lease income.
Yeah, and this usually happens if you're in cell phone towers can happen if you're not in a high, group of people. If you're out in the sticks,
it's going to be farms. Farms are famous for doing
farms are huge.
Tower leases.
So my family has a couple ranches, or had a ranch in South Carolina, and I always remember because down in the corner of the neighbor's farm was the most beautiful pine tree you've ever seen. It was only pine tree for miles. And I go, that's a cell phone tower. Yeah, but they had come to my grandfather years ago, and he was an old timer. He's like, I don't want any of that stuff on my property.
Yeah, government's watching me.
I know I could have inherited. I could have been giving you guys all your messages.
There you go.
So those are good. As far as the billboards, then obviously they want a lot of traffic, freeways, different parts of town, this and that. But the premise is great. Once they put them up, then there's really nothing there. They don't have toilets. They don't have heaters. They don't have, they're up. You collect a check. Usually it's going to go up with inflation. It's just really,
well, generally, let's use the billboard, for example, right? We have a lot of billboards, going down 580 right through, I'll just kind of say the Moana Lane, Plum Lane corridor, right? Where traffic really builds up there. So the landlord has that piece of property. Then you get a company, one of the major billboard companies. They come to that landlord and say, all right, we got a deal for you. We want to lease a piece of this land to put a billboard. They sign a regular commercial lease. I'm just speculating. Correct me if I'm wrong. They sign a long-term, commercial lease, and like you said, escalating clauses, etc. Then they go to Dwight and go, "Hey, Dwight, we've got 800,000 cars that go by us here, so therefore we'll lease you this billboard for $5,000 a month. Usually it's going to be less or more than what they're paying on their lease, of course, and they pocket that spread."
Yeah, they're basically a billboard company middleman, if you will, right? Go. Like you and I could, if we knew the minutia and we knew how to get in and out, we could probably build our own billboard, but we don't have the setup to go get the clients. So or they do. You're going to sign a very long-term lease with them for whatever money. They're going to charge probably double or more than what they're giving you. The thing to be careful of, and I don't know anything about billboards, so I'm no expert by any means, but I know that, like, for instance, Reno and Sparks went through this big billboard issue a few years ago where
Yep.
can they have lights? How big can they be? They actually took down a few, they made people take down a few billboards that weren't permitted properly. So it's not like you can just go throw it in your driveway and start charging your neighbor,
Right.
But it is, if you have the right piece of property, they are profitable.
Do you mind sharing? You don't have to go into any details about the relative of the Vegas billboard.
Yeah. So he was part of a big commercial kind of conglomerate, and one of their holdings was a very large billboard right on the strip. And he always told me it was the most profitable billboard, he said, in the world. I don't know. But he said at one point they got a $500 million loan against it. That's
So
how much.
that means it's worth more than 500 million.
Yeah.
Probably worth what, $1 billion, maybe? I mean, 50% loan.
Yeah.
Well,
Loan
what
to
is,
value?
think of like Times Square. What is
Yes.
what is Times Square worth? And
Yes.
as far, so you can imagine the strip. But yeah, and like I told you another story off there, we had a client that had a billboard, which I thought was a great spot on 80 East. It was make like $2,000 a year.
Right. Yeah. So
It's all location.
yeah, and negotiation skills.
Yes.
All right, along those same lines, real quickly, cell towers. Now, there are companies out there, publicly traded companies, that do nothing but build and acquire cell towers, right? There are actually some funds and things that have nothing but a portfolio of cell towers. Those are very lucrative, like I said, in the farm space that I know. Again, I'll just say very lucrative. EV chargers, I love this one, Corey and Dwight. Obviously, as electric vehicles, if they continue to grow and, as far as demand, etc. Yeah, we all know there's a shortage of EV charging stations. So that's another great, I love that idea, Corey. Love that idea.
Yeah. And I don't know anything about those. I have a very good friend of mine that installs those. He did them all. Remember that big Volvo lawsuit they had a few years ago, and they had to put a bunch of money into EV chargers because they were relying on their emission standards.
That's right. Yep.
And so he was the company that was hired to go put them all over Nevada. But he's like, man, you should look at this because everybody's using them. He goes, but they don't charge people to charge their car. So I'm like, well, how do you make the money? I was like, I have no idea. They pay me to put them in, but they don't charge people to do the actual
Someone's
charging.
charging the people.
Yeah, I don't know.
Yeah.
Hey, John, that reminds me though, California once was talking about that, they weren't getting taxed dollars off gasoline. Have they found a way to
California,
remember, if you had
dollars off of gasoline? What?
If you have an electric car, you don't need gas. So you don't get the tax, the road dollars. Have they got around that now? Have they figured out?
I have not heard. That's a great question.
Haven't either.
I'll look that up at the break. Yeah, that's a great point. I know in California, I am sure somehow
they found a way.
Yes. Yeah. The supplier of the electricity has got to be paying them something. California doesn't provide anything for free. We know that. Real quick before we go to break, Corey, let's jump on this next one. Point number 2, solar and energy leases. This is another great one. I mean, drive down 395 to Southern California. You're going to see a massive slew out in the middle. I remember as a kid going through there, nothing but sagebrush. Now it looks like an ocean because there's so much reflection off of thousands of solar panels. And it was just unusable farmland before.
And you can get 80 East just out by, east of Sparks a little bit, and you can see the big solar panels they have there.
You're right.
Again, this all goes back to there's a lot of people, believe it or not, that have a lot of land or they have access to a lot of land, but it doesn't generate anything. Well, now these kind of things, billboards, solar, energy leases, they can all generate things, mineral rights, water. I mean, that's the reason real estate is what it is. There's always value in some space. It just depends what your imagination.
Did I ever tell you a story? I was meeting, confidentially with my representative from I probably shouldn't say their company, one of the largest Wall Street firms, let's just say that. And he said they have a private equity division like all these firms do. And we started talking about different things. He said one of the most profitable investments the firm has ever made in this alternative division. He said, we have a fund so people can invest into it. But this fund goes out and puts, they have a contract to go out and put solar panels on Walmart buildings across the country. And he said, you have no idea the cash flow that this thing spits out. He said, it's just unreal. So yeah, it's all about creativity, no doubt. All right, let's wrap it up with Kristen Snow right now, Traffic Center. Hello, Kristen. Welcome back to the Jon Sanchez Show on News Talk 7 QH. Mr. Millard, your phone number, sir.
Yes, sir.
Thank you, Mr. Edge. All righty. Thank you, friend. All right, here we go. Alternative real estate cash flow. So we talked about, okay, one idea, billboards, cell towers, and EV charges, wrapped up with solar and energy leases, turning unused land and warehouse rooftops, etc. Corey, let's go to the next one. Digital real estate. So warehouses and properties converted into data centers and server storage. There's those two magic words everyone's talking about.
Everybody's talking about it. And I'm not an expert on this at all, but I can only imagine the amount of space they need. So if you're blessed to have a lot of space, access to good power, they need water for cooling. If you have all those things on your land, then you should probably look into something like that, because the amount that they're building and the amount that they say they're going to need in the future is astronomical.
Staggering. Yeah, the average starting price of a data storage facility starts at about $2 billion.
Wow.
And just goes up from there. Have you heard of any being proposed, let's say, out in Trick or any place like that?
Yeah, I think they have them out in Trick. They have Switch does that, don't they? Switch is a big one.
They're more internet configurations
Are they? Yeah.
And things. Yeah, they're not really a quasi data center. But I'm talking these pure data centers like for AI. I haven't heard anything locally.
Yeah, that I do not know. It would not surprise me, because they're always talking about the need for the water and the power sources, and so they have the infrastructure for it.
So I just gave you the best real estate hint around, Corey. You need to go out
create another Trick. I just need 100 million acres if anybody has it.
There you go,
John. You gave it to me. I just texted my dad. You need to turn Empire Ranch into a data center.
Yeah.
There you go.
You got all the water.
You got a few ponds out
there.
Yeah,
exactly. Cool it down.
It'd be the prettiest data center around with all
there you go.
That he has, of course. Good idea. All right, Corey, let's run to the second one, or second to the last one. Specialty storage. These are high margin things. I love these ideas. RV and boat storage, climate control wine lockers, classic car garages. Those are really popular, like in Los Angeles, etc.
Those are popular. The RV and boat storage up here, and Dwight can attest to it, is very popular, very limited. They have out here now, I don't know if you guys probably know about it, but these lockers where you buy the space. So you can buy
I did one of those years ago in Silver Springs.
So and people make money, and people own multiple of them, and so you can, if you don't want to build the whole thing, you can say, well, I'm going to go buy 5 of these lockers and I'm going to lease them out, and then do all these things.
That's right.
My partner and I, a few years ago, were going to do container storage, because the business model was awesome. You could add to it, but with the city of Reno, good luck doing anything outside the box, because they don't think outside the box.
All right, the boys' last point that we can't get to. We only have a couple minutes or seconds left. Senior co-living. This is where you convert a single-family home into a licensed cash-flowing machine. So for senior living space. So, bottom line, I love your point, Corey. That's a great thing about real estate. Always an idea. Just got to be creative. Have a great team. Excellent job, boys. That was a lot of fun. We'll do it again tomorrow on the Jon Sanchez Show. God bless.